everybody, welcome to Monday Morning Must Knows. My name is Merlin Broken Record Rothfeld. Why broken record? Well, because the market's all-time highs yet again. NASDAQ, S&P ripping through all-time highs. Dow got close, and the Russell, well, we'll worry about the Russell maybe in a couple of months. Anyway, we have a lot of things to talk about for the upcoming trading week, so let's get started. Of course, as you know, I'm going to start with the earnings calendar because there still are some earnings that are rolling in. There are 431 companies to be precise. Nothing on Monday, but Tuesday brings you CrowdStrike, Target, Ross Stores, the EV Darling Company, which is not doing so well recently, NEO, and Nordstrom's. Wednesday, you've got JD.com and Dollar Tree. Thursday, you've got Broadcom, Costco, Marvell Technologies, Kroger, and DocuSign. And that, my friends, is pretty much it for your earnings week. Again, 431 companies. Some of those might be market movers for your portfolio, but be careful, as we state every week on this program. It doesn't matter whether they come out with good earnings, bad earnings, because they may lower their forecast, raise their forecast, and anything can happen. So be careful with all of those on earnings. Now let's get to some bigger picture items. We're going to talk about rate statements. No, not the U.S. We do have across the border coming through. That's right. Well, across the border, we've got our neighbors to the north. That is going to be the Bank of Canada coming in at 5%. Right now, they're currently at 5%. They're expected to stay the same. That's going to happen Wednesday at 9:45 a.m. Eastern Time. But there's one more to think about, which is pretty impactful as well. They've been stuck at 4% for quite a while. That's the ECB, the European Central Bank. Right now, they're at 4.5%, and expectations are they're going to stay at 4.5%, although I have heard that there's talk about them potentially raising or lowering. Who knows? It's all speculation at this point. Right now, the general market consensus is staying the same at 4.5%. That will be Thursday at 8:15 a.m. Eastern Time. Now, why is this important? It's important because right now the United States is kind of the benchmark for the world with regards to rates, and we have been holding, and we're starting to see inflation tick up just a little bit. Well, the ECB has been holding as well, so most likely they will follow suit with what we do. However, if conditions deteriorate or get better over there, they may jump and become a little bit more proactive there with the rate announcement. Anything that deviates away from the expectation could cause a tremendous amount of volatility, and that's why we should pay attention to it. All right, our next piece of news brings us back to the United States. Of course, Jerome Powell, the most important man in the world, the most powerful man in the world, he is going to do a couple of big speeches this week. The first one is going to be on Wednesday at 10 a.m. Eastern Time. These are semi-annual monetary policy meetings that he holds. The first one, again, is Wednesday. That will be in front of the House Financial Services Committee. And then the next day, on Thursday, he goes in front of the Senate Banking Committee. Now, I expect there to be a bit of fireworks, a bit of grilling on Jerome Powell and what he's doing for inflation and GDP and unemployment, all these things that they're supposed to be looking at. And maybe some of his comments could cause more volatility in the market. The important part to know is he will be speaking at that time, so I would expect there to be sharp moves up and down throughout his presentations based off what he says. And finally, we bring us to our last piece of information for the week, which is actually a five-fer. That's going to be the unemployment and jobs data. We'll kick things off early in the week. That's right. We start off with the ADP non-farm employment change on Wednesday at 8:15 a.m. Eastern Time, followed up on that same day at 10 a.m. by JOLTS job openings. Now, the ADP non-farm employment change is certainly the bigger of those two, but either one could have an impact. We have our standard unemployment claims coming out on Thursday, and then finally, we have our unemployment rate and non-farm employment change. Right now, the expectation is that we're going to see a significant decline in non-farm employment change, going from 353,000 jobs to only 190,000 jobs. That's a pretty big contraction. However, the unemployment rate itself is expected to stay right at 3.7%. Now, as I've mentioned many times throughout these videos, it's important to know when these announcements come out, but don't hang your hat on what that number might be. It's just knowing that at this time, there's supposed to be this data release, and it could miss, it could disappoint, it could be better than expected, and that will just create some volatility in the market. The best thing to do is to be a bit more cautious, step back from the markets for a little bit, let that news filter through, and then wait for those trends to develop after that. That, my friends, is your Monday Morning Must Knows. We'll see you next week.